Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Patrick Karim of NorthStar BadCharts. How you doing today, Patrick?
Doing great, Darrell. Very happy there to be able to catch up with you.
Yes. So I noticed that you have the Punisher on your shirt. And so I was curious, are you punishing the markets, with looking at the charts? Are you being punished by the markets? Is there any significance here?
Yeah, I don't know. Yeah, it's where I'm happy you know this is the Punisher shirt, because sometimes I wear it outside and I'm afraid people think I'm some type of satanic person there. It's the Punisher, the Marvel superhero there. I love that there. Even the movie there was an action movie that did in the late 90s there. And yeah, the Punisher's cool. I have the comic books and all that.
Yeah.
No, I don't know. I felt like, maybe put a stand there. It's like a lot of emotions out there. But the charts, we always have to go back to the chart. It's crazy because before oil broke out there, I don't know if we talked it on your last show, if I was trying to be bullish or that, but there were setups, the same setups, and I'll share some charts here, the same setups that we had that led to this crazy silver breakout we're starting to see that in other asset classes. And that's when you should be bullish, is when you're spotting that setup, guys. You're bullish. You don't buy yet. You say, okay, there's a bullish setup. My eyes are on it. And once you have a confirmed breakout, then you should be your max bullish on the breakout. And as time moves on, you should actually not be bearish, but you should be less and less bullish. And that's a good recipe. And that's contrary to everything you see. Because right now, the only thing you see on X and social media and YouTube, oil $300, oil $200. But the setup was, but oil moves so fast that it's kind of hard to trap. But there's still some plays out there to be done there, and we're probably gonna look at the charts and see.
Yeah. Let's start. Let's start with the oil chart. So I've been obviously the major producers have moved. I don't want to say significantly. I don't know how high these stocks can go. But I have been seeing some oil plays like offshore and some other sectors in the oil industry that have not necessarily moved significantly. Or maybe it's just my stock picks haven't moved. So I'm just curious of your perspective on oil. We had this huge breakout. What are you seeing there? And then what about the equities performance? What's your assessment there?
That's right. Well, here's the big dog, Exxon. So Exxon did a beautiful breakout, and it's just running upwards. It's not super stretched right now. You see, historically, if I stretch out there, historically, Exxon has had some peaks. Reset chart view. It has some peaks when it's stretched. Guys, the bottom pane, the distance from that 36-month moving average, the red line. And it's had some peaks when it was super stretched from that moving average. And sometimes you have even aggressive, here, you see, I'm a peak distance from moving average. You have a correction, but what the correction is actually, it's a rising correction, right? It's just, you're slowing down. You're still going upwards, but you're slowing down and you're letting that moving average catch up. And then you create the opportunity for another shoot upwards. But look at that again here, top, sideways pattern, consolidation. Then we got another little run. And we're about halfway through. So even for Exxon, it's not that bad there. Yes, the breakout was a couple of months ago, but it's still an uptrend. So right now, maybe you want to wait for some type of correction here, and then you get another shot at it. But I want to bring people's attention here to oil plays, and I want to break a myth here. Oil plays, while they do get tailwinds from higher oil prices, look at what Exxon did during the 1980s. It went crazy, guys, and oil went nowhere. So you got to be really careful. Exxon, some of these plays, like I even show you a correlation. Let's look at the mathematical. So a correlation coefficient for trend. And I'll compare Exxon to the SPX. I'll put that here. And then I'm going to duplicate that. Duplicate, copy. And then I'm going to compare Exxon to the price of oil. And I'm going to minimize this one. I'm going to make this one pretty. Whoops, where's my pretty? Here, I'm going to put that style. area here like that, and this versus oil. I have to put it black because that's oil color. And here we go. So check this out. The higher this is, the closer you are to 1, the more statistically you have a trend correlation, positive trend correlation with the stock market. So Exxon, look at that there. Look at that. Like Exxon above dot 70 is statistically significant. So let's say here my dot 70 line. Look at that. It's mostly, not all the time. There's periods where it's not correlated with the stock market. But look for years here, stock market. Except here in recent times, it has been negatively correlated to the stock market, negatively. But now look, it's almost positively back again versus the stock market. And look versus oil. Visually, you could see it's all over the place versus oil. It's like it's never really 100% correlated to oil. It is here, but for short stints, not as much. So guys, oil plays, people that always say, oh, they always think like this, right? I don't know, maybe that comes from the precious metal sector. Gold's going up. I want to make money. I'm going to lever up, not on gold, which they should maybe do, just buy option calls or, the futures, use margin, whenever, not financial advice, but you could lever up on the actual gold play. But people, instead of doing that, say, no, I'm just going to play miners. And the miners in their head, it's going to be leveraged play on gold, which it could be on a shorter time frame, but usually miners over long periods of time, they get destroyed by gold. But that said, look here. So if you're playing Exxon Mobil, are you really playing oil or you're playing something else? Because when I see that chart there, except for this short period here, most of the time, and look here, even the correlation with gold, with oil here, look, there's none. It's zero. It's not negative correlated with gold. It's not positively correlated with gold. It's just there's no correlation with oil for Exxon, right? And then people tell me, oh, look, oil went bonkers when it broke out there a few days ago. And people say, oh, well, how come my oil plays aren't going up? Well, they're not correlated.
Question on that. So obviously, when we see Exxon heavily correlated to the stock market, the broad indices for a while, how much of that is attributed to, you may not even have numbers on this, but, before we had like energy stocks make up a higher percentage of the S&P 500. I think now we're only at 3, maybe 4%. And I think it's been higher above like 10% at one point, especially in the last oil bull market in the 2010s. And so curious if you have any thoughts there.
Yes, well, here at the 1980s, it was the energy plays were probably a high percentage of the stock market. And as even oil plays going up in price, they were probably less and less a percentage of the stock market, yet they still correlated with the stock market. But I don't know if that's I'll have to probably dig into that there. But now, no matter if it's heavily weighted in the stock market, which it's not, now it's still, this SPX is probably like the tech sector and communications, that's still heavily weighted. It's still, look at the correlation there. It's still there with the stock market, except for this stint here. So just be careful whenever you have a notion, a preconceived notion of something. Only the charts will tell you the truth of what's really, really happening. And don't guess. Use charts, put a correlation indicator, and let that tell you the truth.
Do you think some of this has to do with obviously the war going on in Iran and the disruptions from the Strait of Hormuz and such? It kind of, I think it makes it harder for investors to kind of like price that in. Like, okay, how long is this going to last? You have, Trump administration saying that, it's going to be over soon. And then you have narratives from the other side of it where, no, this is just getting started. This is the start to World War III. So it seems like it's harder for investors to even, plan long term in terms of, with this oil play, because it obviously with the higher oil is, the more margins that the company's going to have, the more profits they're going to make and things of that nature. But, if you're seeing headlines and you're seeing big big swings in the price of oil, it seems like that could be play a factor as well. Curious if you have any thoughts on that perspective.
Well, you see, because you're describing what's potentially a bullish storyline for oil, higher oil prices for oil companies. But there's also a narrative that if there's a recession or if people aren't going at the pump, even if they have a higher margin on selling the oil, if less people are buying oil, then it's gonna hurt them, right? And that could probably explain why when everything, the stock market's doing well, people maybe they're going more at the pump, and so even if the margins are less because the oil price is lower, they're still catching up and making that money, right? Because that thing. So what I've learned from all that, Darrell, is that's why I try to tell people. And when I go on your show or any other type of shows, often they have us on as technical guys, but I'm pretty sure most of your interviews are not with technical guys, right? They're with fundamental guys and people with, I like all that stuff. And what I tell people is, look, I don't know all the fundamentals. I don't know them. And I know there's going to be a fundamental I'm going to discover. And even fundamental guys, every week they do research, right? And discover new fundamentals. So if they know that they don't know everything right now, isn't it dangerous to try to pinpoint a narrative why the price is moving a certain way or should move a certain way? So the way I see it is all the analysts around all the world, they're placing their bets. And what I see, the chart is just the aggregate of all that. I don't want to say price is superior than fundamentals, but in a sense it is, because fundamentals, they'll do their stuff. But at the end of the day, it's the aggregate of all fundamentals. So it's that chart. Oh man, here's a quarterly chart for Exxon. I just noticed this crazy, crazy breakout that we could have in a few weeks, said Darrell. That's a quarterly defined breakout. My goodness, look at that thing. Look at that black line, guys. That is a crazy, crazy breakout. So forget the war. Forget the fears of recessions. Forget fears of anything, guys. If I get a quarterly breakout here on that chart, I am going to go bonkers on you. That is super, super bullish. Look at that. Mm-hmm. You see that line? That is just crazy. The targets for Exxon, there's a whole bunch here. A non-greedy target is all the way up here. My goodness, look at that. Guys, we're discovering this live with Darrell. That's the target. Quarterly candle. So what's going to happen? I don't say this is what I'm imagining. Either a correction or no correction, probably a retest here from above. And that's a low risk entry. Here, I could even show you risk and money management there. Let's say you would enter here. Your sell stop would be here. And your target would be here somewhere. So it's a 2.5 to 1 risk to reward ratio. Maybe I could squeeze it. So I risk losing 1 here. And if I win, I'm going to win 2.65. That is awesome. Because even if I'm right 50% of the time, so 50% of the time I lose 1, 50% of the time I win 2.65. That's a net gain every single time.
Yeah. Okay.
Look at that. That's crazy, man. That play is just insane. So who cares about oil? Who cares? Look, if people want to look at oil, let's look at the oil play. And I would just treat the chart based on its own chart merit, guys. So remove noise. I know people want to, correlations are fun, but what I would do is I would just look at the oil chart itself, and we have to wait. This is the monthly chart. It had a breakout out of this standing line the month before. So even before this explosion upwards, people could have bought here maybe. It's an early, and now the price went up here. This is pretty ugly actually. A wick like that is not pretty, and there's a case to be made there that I think it's discovering this bigger, more important breakout line here. So you have 1 touch, 2 touch. We're starting to touch it a third time, but I'm expecting a monthly close here eventually. I don't know when. And then after that, once we bounce off it, oil is going to go up much higher above here. But right now, there's a lot of damage here done on that shorter time frame. Let's go on the daily. But look, before I go on the daily, Darrell, look at this. Look how I am not stretched from that red line, that 36-month moving average there. We're not stretched at all there. There's still a lot of fuel left in the gas tank. Yeah, I know there's a bunch of tons there to do with that, but it still has a lot of fuel there. But right now, it really took a hit on the daily. Let's go on the daily chart, remove drawings. Yeah. So here I left my lines from the higher time frame here, and it seeped above, but now it's still super, super stretched. Even I think on X there, I mentioned people, look how stretched it is. So here's the distance from the 36-day moving average. So whatever you do, TA guys, on the higher time frames, you could also do it on the short time frames. If you want to pinpoint a better entry point, you can see for oil here, the better entry points when we were coiled and tight right here, started to break above the 36-day moving average. And then you had another shot here. You had another consolidation, and then you had another shot. So for oil, somebody wants to trade this, they could have entered here and then here. But now you're so stretched, you got to let that thing unwind. It's tempting. Oh, like this trader, what do you say, Hormuz? How's that pronounced? Hormuz. Like, oh no, they're going to block it, or Trump's going to say something, or the words, like, you're going to get whipsawed to death. No matter what oil does right now, you need to let the price heal itself from that distance from moving average. So right now we're still super stretched. You need to let it heal. And once we get another black line here and another breakout from it, that's when you get back into oil. So I don't know what the price of oil is going to do here. Is it going to rocket to the moon? It could go here, 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 here. I'm going to buy it once I get a similar chart pattern that I got that launched me the previous times, right? Here, whatever this launch pattern was here, you see the sideways move, coiled and tight, bam, explode. Now you're not coiled and tight nowhere. So even if there's volatility and you get these crazy wicks right now, there's nothing to do. And look how stretched we are historically, 42% above that 36-day moving average. I'm just going to stretch it, guys. Look here. Hold on, I'm going to make this big. So I'm going to have to. So look here, the only time we were above it was back in May of 2020 when we had that peak here. No, not the peak, sorry. When we had that crazy dip below, and then we rocketed upwards out of the abyss of the COVID lows. Then after that, what happened when it was super stretched? Well, price went a little sideways here. And then after that, then you had an opportunity to get in later. But look at that. Look how stretched we are. That's a red line. Historically, I'm stretching 2000. Oh, only in the 1990s. 1990s, we were that stretched. So price did rocket a little bit more upwards after we were stretched. So that could 100% happen. But that was not the low risk entry. The best entry was down here. And then you could have ridden it here, either exit here. And after that, you got a blow off top. And that was the end there. And what about the 70s? Let's see in the 70s if we were that stretched. I have to go on the weekly chart. Yeah, no, it's because the futures, the crude oil futures, they're not old. Let me put the spot. Go back on the daily. Reset chart view. And let me put my horizontal array. So here, that's how stretched we were. So 2020. 1990, and look at that, 1974, and that's 18. So in the 1980s, when you had these blow-off tops, that's the last time we were that stretched from that moving average. So that's not good. It just needs a little bit of time to heal. Just let it do its thing. Oil is probably going up much higher, but you need to just let that thing, settle now. There's just some damage there.
Yeah, for sure. Yeah, that was interesting seeing it above. I think it hit close to $120 a barrel and then corrected significantly after that in one day. So that was pretty very volatile move.
George and his team, a 16-year VRIC employee building some of the largest mining operations on the planet. We started a drill campaign, from the drill campaign moving into a full engineering report and study. We came out with our pre-feasibility study in 2021, and it showed a really impressive economic case for advancing the project. We'll have final definitive feasibility out in December of this year. So in the space of 4 years, fully engineered, fully permitted. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
I'm curious your thoughts on the VIX. So the VIX spiked, and then it's been kind of spiking, then falling, and such. And so, what's the chart say here?
Yeah, Well, the volatility is still increasing. Look at that there. That is, I haven't checked the VIX in a while there, but it's not doing a full higher lows, higher highs. That thing's in nut trend there. So it could be, it's an upwards channel there. So it's vulnerable for some type of explosion upwards. I'll show you something. The VIX also looks like the volume on the SPX itself. Sometimes I like doing that. But let's say I put the SPX, new pane. Ah, goodness. Yeah, the VIX is not calming down there. So let's say I put, goodness, yeah, I'm not set up to do it here. Let's just stay on the VIX there. Line chart, remove noise, remove all that stuff. And I'm gonna put on the weekly. Yeah, look, here's the COVID spike. Here is the GFC. Yeah, this is not good there. Yeah, the VIX is the VIX is not letting up there.
Yeah, like it looks like it could spike higher.
Yeah. So yeah, the VIX is going up, but if ever it starts cooling down there, that's going to be fuel for U.S. equities. So if VIX spikes, actually signal bottoms in U.S. equities. So we just don't know how high that's going to spike, but the unwind of it, the unwind of the VIX is great for U.S. equities there. Mm-hmm. But yeah, I got to keep an eye on the VIX. The gold silver ratio is also spiking upwards. Yeah, it's going upwards. It's resetting upwards. So that's not good either. So that's gold versus silver ratio. You see, guys, when you have spikes in the gold silver ratio, it's a risk off environment. Gold and silver might be both getting sold off, but gold being sold off less. So this is, we're not quite there yet there, but if ever this spikes upwards, that's going to be something to keep an eye on. Even the DXY, spikes in the DXY could also be seen with market sell-offs. Here you had the COVID one. So you got to be careful, not all the time there. You got to be careful again with these correlations there. You got to play them one by one. Here's the dot-com bubble, the DXY putting a whole bunch of pressure. And I think in the GFC also we had a spike here in the DXY. So DXY, the VIX, the gold silver ratio, I see those as like, market crash indicators. But at the end of the day, all you have to do is look at the actual price chart of whatever stock market you're looking at. So here's the Russell on the weekly. Even here on the daily. On the daily, we lost a rising support line on the Russell, 100% correction mode. And now it's vulnerable. As long as it keeps oscillating here in between those two dashed black lines, it's vulnerable. Bullish if I close above that black line here. But again, that's why I like telling people, all bullish looking continuation patterns, right? Somebody could think that's a pull flag, and all bullish looking continuation patterns that fail are tops. So we don't know yet, right? Here you're bullish, then you're agnostic. Once you start losing a rising support line, you become agnostic when you're in that zone. And then you just wait. Nobody should be in the Russell right now. You're not shorting it, you're not long, you're waiting on this time frame, you're waiting for that sideways move to resolve. So it's precarious. Here's the same exercise on the SPX. Below that black line here, no bueno. Below this here, no bueno. Maybe I could rise, So now it's in a correction mode. But with hindsight, of course, it was a distribution top, right? It could have been, look, I'll show you, there's examples of this all the time there. So let's say here, I lost a rising support line. And then after that, I started building out my that was an expanding bullish looking flag. But look, it broke to the downside. And then we had even more drawdown. So we just don't know here if that's going to materialize in an up move or down move. We don't know. What about the Nasdaq? I think the Nasdaq also is looking like that. There are a whole bunch of rising support lines that have been lost. Look at that one, losing it. So sideways grind for the Nasdaq. It's dangerous times there. It's not we don't know yet. The market's starting to decide. And there's one chart there. If I could take a little tangent, It's those yields there. Where's my yields? Look at that. Look at that. The 30-year. Look at the 30-year yield, and I'll show you why this is probably bullish for. Look at the 30-year yields. They're not crashing at all, Darrell. And this is very close to breakout line. And I'll show you a chart that looks like this. And new price scale, log scale. And look, not always, but recently, in recent memories, Exxon has been tracking these yields there. Look at that thing. So I'm wondering if these oil plays are front running higher yields. But for a while, I thought the twos would drag us down. Look, I'll put the twos here. Remove indicators. The twos haven't totally fallen apart yet. There's these inflationary pressure there that's still coming in the pipeline. So the twos look vulnerable, but they stopped falling. Here's the tens. The tens, man, are so close to breaking out there. My goodness, look at that. That is crazy. So there's still these upwards pressure. Will we get a strong recession? We could have a breakout here, false breakout, or maybe explode upwards. Then whatever recession here we get, it'll just be a retest from above. But that looks bullish. If we close above that black line here, that looks pretty bullish there to me there. The yields are going to keep going up, man. So what does that mean? Markets are pricing in more bonds getting sold, and yields have to reflect that. Look at that.
Yeah.
So that's crazy. Wow.
Yeah. That's interesting. So let's look at the gold silver ratio again. Okay. So obviously, silver had a massive run up until the end of January. Gold has held up relatively well compared to silver. Silver's been in these huge price swings. And so just curious so you said if we see a spike upwards, that means that gold is more in favor on this chart, correct?
That's right. So this is great for stackers. So if I'm holding a gun to your head, I'm saying hold gold or silver. If that thing's going upwards, then you should be holding more gold than silver. And if that thing's trending downwards, you should be holding more silver than gold. And you'll see here that this is there was a great setup here back in the 2000s. So essentially here, you had the gold silver ratio go down. So that's silver outperforming gold all the way to 97. And then as we were approaching 1999 and the dot-com bubble, look at that, silver starting to underperform gold as the market was selling off here. So I'm suspecting here that we had the same thing here. We're like in the lead up to like a dot-com capital rotation event type of scenario. So we're going down. I don't know where it's going to stop. And then on the way up here, that's going to be the risk-off environment setting up. The VIX going up, gold silver ratio going up. And then after that, once everything started really rolling over and we start recovering, then silver is going to start outperforming once again gold. And then we're probably going to have the greatest run for silver will be probably after the next move up in favor of gold. And look at that. That's exactly what we had back here. Then after that, we went down. Here's the GFC. But then we had a great run for silver here, outperforming gold. And that's where you want to be. Because silver, when it's in that mode where it's outperforming gold and outperforming the stock market after a stock market drawdown, it's like nothing. There's not much that beats silver there. Silver's going to beat gold, going to beat the stock market, it's going to beat a whole variety of stuff, I don't even know why you'd bother with the miners if silver is outperforming gold. I would probably just stick with gold in that way there. But here's silver. Look at this silver. Again, silver super, super stretch, guys. So there's no low risk entry here for silver at all. And I've been posting this on X, guys. Here's going the daily chart for silver. There's still, while it has reset here, there's no actionable chart pattern. I don't even know how to draw this yet. There's nothing yet so far. And silver's actually quite vulnerable right now. It could actually have a breakdown. Silver's like hanging on support right now, guys. It's getting really close here. Everybody wants silver to go to the moon, but because it's super stretched on the higher time frames, even if I'm having a correction here, I'm going to trust this less. So even a daily defined correction, let's say it does break out here. Fine, okay, it's breaking out, guys. What do you want me to tell you? Let's say it does that there. I'll say, yeah, it broke out here, but I'm not going to trust this breakout here as much as I would have before, because look at that. Now we're having this correction here, breaking out when I'm super stretched, where I would have trusted more. That same correction's happening down here or down here or down here. I'll trust it more, right? After a nice reset on the higher time frame. So look, what would be cleaner for me is just silver keeps correcting on the daily chart, and then maybe on the weekly, and then even on the monthly, and we just keep going sideways for a while until the monthly chart. That's what I would like here. Just keep going down or sideways, that I would get way more bullish silver if ever we do that. And look, it's not like it's never done that before. Look at that spike, and after that it just went sideways. It let that moving average catch up, and then it exploded away, right? There's resets all over the place here for silver, creating these great opportunities. And right now, until we have a similar pattern to this, I'm just bored. What do you want me to tell you? I'm bored. Like, I'm not gonna tell him, look at that. Even here, this crazy melt up. Let those moving averages catch up. But there's no setup pattern. So even if silver rockets upwards from here, it still did not make sense to enter here. If you're on the sidelines, it's just nonsense. It's just doesn't make sense at all until you have some type of pattern. I don't know, maybe it's going to be shorter, longer, but look at that. You want that distance from moving average to reset a little bit more than that there. And maybe that's why we're getting headwinds on the shorter time frames. It's because there's still, everybody that bought here at 25, at 30, at 50, they're on every single rally, they're going to try to take profits, right? I would.
Yeah, for sure.
That's what you do, right? All these people who bought here, take profits here. There's profit taking all over the place. And even here, we have a crazy pattern here. I'll show you on the yearly chart. So even here, we had this crazy breakout here. Even the cup, not the handle part, has already reached its measure move target there. So there is a bigger target there. Like, I'm still super long-term bullish silver. So there's a bigger target here for silver up here at whatever, 233, even higher than that, 275, 300. But right now, we're just hitting resistance like right here there, because the energy of that handle, we're there. We're there. And you see, look, you'll see that all the time there. Flag, pull, flag. Look at that, target reached. We're just there. This is a profit-taking area for a lot of people. And there's going to be a bigger move around the corner. But it's once we resolve whatever we're going through now, we just have to resolve it, and then we'll be golden. Yeah.
Okay. What's the low target? So if silver were to go lower, where do you see that price being?
So we'll go step by step. So here's the daily chart for silver. Right now, I did this a few days ago. We're now probably, or yesterday, I don't know. Then look, if we fail here on this rising support line, I don't know what that is, $84. Then after that, we're likely going to go hit this medium-term rising support line, the daily, which will be maybe 74.56. If that fails, then we're looking at this longer-term rising support line, and that's going to bring us in the 60 area. So one thing at a time. There's no need. As the support lines fail, then the vacuum, that's your target, right? That's the advantage of drawing lines, is once you've identified the line, the less steep it is and the longer it is, the more important it is. That's pretty much the rule of thumb there. So we just got to wait and see if that rising support line fails. Let me go and do it for you guys here. Okay, here we are. Ooh, Darrell, getting close. So I'll just put here. So here, maybe if we get a close at 83, a daily close at 83, then my target would be maybe somewhere down here at 71. And if ever that fails, but usually before it fails, you get
Get a bounce.
Yes, exactly. So who knows? It could go all the way back here, the bounce. And then if it fails, it's in phases, guys. And it's probably going to try to retest. But what's beautiful here, maybe we're going to start, it's going to start creating this bigger pattern. And then it's going to be clearer what we're going to need to look for, for a breakout eventually. But these are the levels, guys. 83, 71. Whoo! Imagine that. Mm-hmm. And look, there's even a bigger top here. I could stretch that. So yeah, you see, look, this is even more. That 71 needs to hold. You got it. That 71 there, you don't want to close below 71 there. That just opens a Pandora's box or the gateway to lower targets. But you just got to be patient here. But look, it's never a good thing when you drop 26% in one candle. And even the 2-day drop was like a record. It was like 46%. I can't remember how much it dropped there. Let's measure it. Price ranged. It's like the largest 2-3 day drop there, 41%. That's the market telling you something.
That's
historic. You don't have these drops randomly there. It's a lot of damage. And oil also has a lot of damage like that. But contrary to even here, this rally here probably trapped a lot of people. I'm not saying we're not going up, but you got to wait until the chart actually breaks out. But contrary to oil also had a crazy drop like that, right? Let's put the oil chart real fast there. So oil did have a crazy drop on the daily chart. But contrary to silver on this crazy drop down there, on the monthly chart, oil was not as stretched as silver. You see on the monthly chart how we're not stretched? Mm-hmm. But silver is super stretched here on the monthly chart. And that's a big difference. From a macro context, silver, because it's stretched like this, it was running hot, longer, and harder than oil has done. So even if they both had devastating moves on the daily chart, which it needs time to heal, I think oil has a better chance of healing faster than silver because it doesn't have this overhead pressure of being this stretched, right?
Yeah, for sure. Okay, let's look at gold. So obviously gold had a correction, but it was smaller than, didn't have the same magnitude as silver.
Yeah. So on higher time frame, gold is still uber stretch. But it's fine as long as it's above this rising support line, but it is 100% stretch. So whatever correction we had on the daily chart here's the daily chart, is not enough to have reset whatever the higher time frames stretchiness. And even gold, it still had a hard candle, still we don't know yet here what's going to happen, still going sideways. That correction is not complete by any means. There's going to be some support lines here. We're going to have to wait. Here's some levels. It's line candle, yeah. Look at that. That could, if that falls there, man, that's not super there. Here, maybe if it closes below, then that opens the door for, a bigger range, right? And it would be healthy. It would be better. I would much rather gold do this now. Seriously, like I would, the bigger the better. And then I would be much happier here if it would break out in a month, 2 months, even more. Seriously, gold there, it needs multiple months of corrections there, multiple months there. It needs something like it did here there. Like it needs many months of corrections there. I would love to see that. I would love to see this, goodness, like, this, we're not going to get that again, but at least, goodness, look how stretched we are from the moving average. It's the same deal as silver there. Until you get, a sideways move like that and then move up. That's what I want to see there, and let that moving average catch up here. We're not even close to that, Darrell. It's crazy. It's like I just love to see that thing heal some more there.
What's that price range right there that you drew a circle around?
Look, on the monthly chart there, you'd want a correction that oscillates between 5,300 and 4,500. That would be just beautiful. If we could get that for 6 months, 8 months, 12 months, I would love that. Everybody should want that.
Yeah,
Because,
I'll be accumulating.
well, yeah, I know. Look, guys, you should never buy before a breakout. But people I know a lot of people, they'll front run whatever I'm saying. Fine, I can't advocate for that. But people, yes, for people stackers who want to accumulate, and that would be the best. That would be awesome, right? Just like this here, So yeah, that's a accumulation period. I don't think it's going to go down here. I think whatever correction it does here will be a healthy one, because there's one big chart that's super important. It's the SPX. It's the gold versus SPX chart. And we are not at any type of historical 1980s top. We're more here. That's another reason why gold could halt a little bit. Is look, we're discovering that resistance once again. So if gold goes sideways, that's performance for SPX, and SPX, or gold goes down a little bit more than SPX, or stays equal to SPX. And then, you see, that's why I think gold eventually, whatever correction it does now, will not be like, it's not going to bring us back to whatever, 1300 or 1800 or stuff like that there. It's just a bullish looking correction above those levels. And then eventually we get here, we get a crazy breakout versus SPX. And that's this, Darrell. This is the legendary setup that will bring gold to 10,000, 20,000 there. This is it there. That's the pattern we're all looking at. We are on the door of that event. It's coming. But what would really launch gold to do that would be U.S. market equities rollover, right? Here, .com bubble. This is a nifty 50, the stock market falling apart here. That's what we need here. We need the markets to really start falling apart. And then after that, bam. We're rich, baby. Then you go like this with your hands there. Just But yeah. Even more than now, right? Even more than now. Because people bought the breakout in silver or the breakout in gold on their own charts, back in 2023, early 2024, they are doing the money meme, right? They're already doing that. What I'm saying is they'll be doing the money meme even more after we break out from that line there.
Mm-hmm. So just curious in your thoughts on this. So typically when we see big drawdowns in the equities, that means we're in some type of recession or whatnot. Is that a pretty consistent theme, or has the equities broken down without us not being in a recession?
No, I think you're right there. So let's with hindsight, they will fill it out with a recession. So let's say I'll put it back on the monthly chart. I'll put my indicators. So there'll be some type of recession there. Look on the rollovers. Not here you see late 1960s recession here. Then you had another recession halfway through. Here you had a recession .com bubble. Then you had another recession halfway through. So yeah, you could expect a recession there. It's fine. Even here you see like the COVID spike low recession. They go hand in hand in the sense that if the market goes down, or people lose their jobs because of the recession, then there's less money going in those passive funds, right? In the ETFs, the pension funds, and going in the SPX. Well, I don't know. This is anecdotal there. I don't know like the actual math of it, but there's a whole bunch of reasons to think that if people have lost their jobs, there's less money to go in the SPX than normally they would. And it would create a recession there. Sometimes you could even make a case that we are in a recession already, or there's a ninja one that we had, but it wasn't severe enough for them to declare it, So I wouldn't be too worried about the actual official recessions. And they often declare them, Darrell, 8 months to 12 months later, they declare the start of it. And sometimes we've had the start and the end, and everything's declared after it's over.
Yeah.
So you just got to look at the chart, because the market participants, guys, they will carve out these price charts ahead of time. Gold, silver, look at this. Look at silver. If I put silver, look at the GFC there. Here's the GFC. Silver spiked at the beginning of it, but it bottomed way before the end of it, right? We're halfway through, and it bottomed silver and started moving upwards, right? So if you're waiting for official stuff there, it's like Don't be scared of recessions, guys. Like the market, if silver's dumping, it's almost telling you there's some type of recessionary event happening there, right? It's almost telling you that something like that's happening. Who cares if officially it's a recession or not? Who cares? If you're in the silver chart, you're losing money. You know, there's a whole bunch of exit signals. That's what all should matters, right? It's like if you have a position in something, you shouldn't fear all those recession talks. You should just fear the actual chart falling apart, and that should be enough. Even here in that August 22 low for silver, you could even make a case that was recessionary pressures right here, right? There was a drawdown. Even I think maybe U.S. equities were going down. It's like, who cares, guys, if there's a recession or not? I know where the business cycle, it scares a lot of people, and that's what they talk on the news of the business cycle, you know, the economy. But we're not trading the economy, guys. We're trading stocks, and often they could be forward-looking. And look here, even here, the dot-com bubble recession, silver practically didn't go down because it was already stretched down on its own price chart. It could have already, markets are forward-looking, it could have actually front-run this recession here a year before it happened, right? And the recession, I have to sell my silver. Hold on. Silver's already went down a lot. It's reached its measured move. It's not stretched. It's actually showing maybe some relative strength. You shouldn't fear that, you know? It all depends how stretched you are from your moving averages.
Yeah, for sure. Okay, and then before we close, can we look at platinum group metals?
Yes. So here's a platinum chart, super stretched, nothing, same thing as silver, gold, same story. It's reached its measured moves all over the place. There's, there's not much to do with platinum. It's just a crazy breakout. Look at that thing there. That's crazy. It's like there's nothing to do here. Ideally, how's it on the daily chart? Yeah, same thing. It's actually it fell apart here. So now it's trying to find a footing, but there's probably a bigger pattern here morphing into place on the daily chart. We got to let that thing play out. Did it lose rising support lines here? No, we're still okay. So yeah, it's a consolidation pattern, but consolidation patterns could also be tops. We don't know, but because it's super stretched on the higher time frames, I don't know how this is going to morph into. But ideally, it would do. I don't want it to break out now. Seriously, like it'd be much healthier if it did something like that there. Much healthier. Because if it does that, then that opens the gateway for, whoa, could you believe that? $6,000 platinum. You heard it at first here, guys, on VRIC with Darrell. But that's the roadmap. But this is high. It's more likely to have a crazy target like that after a huge consolidation. Look how long it needs to consolidate just to do that move, right? Look at that thing. It went sideways forever there to create that move, right?
Yeah.
So show me a great base, and I'll show you an opportunity. Now there's no great base, so there's less of an opportunity, right?
Yeah. So pretty much, I mean, these metals need to cool off. They need to consolidate and such, build a base before moving higher.
Correct.
Yeah.
That's it.
Yeah.
That's what we should seek. If they don't materialize these consolidation patterns and the price still goes up, well, who cares? Well, people in the trade already, it's good for them. But somebody on the sideline, if you don't have a setup, it's like pros in any sport. They love the setups, right? Michael Jordan, whenever he sees a defense, how it's set up there, he's going to know exactly who to pass to Pippen, to Rodman. He sees a setup ahead of time, right? And he's going to play that setup because he knows there's a high probability of scoring, right? And as chart traders, you see those setups. Why play? You have the luxury of waiting for those setups. Why play anything other than a beautiful large base setup just because you feel FOMO and you're afraid to miss something out? It's just, guys, fight that urge. It's tough, but you got to fight the urge there.
Yeah, for sure. Yeah, I appreciate you sharing that with us. And then just lastly, what indicators should investors be looking at when they're looking at the charts? Is it mostly RSI, MACD? Which indicators would you recommend that investors look at?
If we're going to look at one, use the distance from moving average, guys, because it's very close to the price. It's not an indicator, which is an exponential of or something like it's not an oscillator. It's how far am I from the mean? It's like very mechanical, very close to the price. And the further I am from the moving average, the more it tells me about FOMO, about YOLO, about profit taking zones. It tells me when there's nobody, when I'm close and tight to my distance from moving average, I know I'm close to, I'm forming a base, right? The price is oscillating in a tight range. Those are the opportunities. And with distance from moving average, you could clearly see those opportunities. And it really helps decide, is this a good entry point or not? It's like at one glance, right away, you show the answer there.
Mm-hmm. Got it. Yeah, thank you for that. Well, where can people follow you and connect with some of your services and such? Plug the audience.
Yes, thanks, Darrell. BadCharts 1 on X and NorthStarBadCharts.com. It's a co-founder with Kevin Wadsworth. You might know him as NorthStar Charts on X. And that's, it's behind the paywall, guys, but that's where you get all the nuanced stuff, the actionable charts, all that, the knowledge base, everything's, it's on that website. And hang in there. There will be a spring break promo coming up. So keep an eye out on X there to know when that promo starts, but it's coming soon.
Okay, sounds good. Thank you, Patrick, for coming on the show. And you all, please hit the subscribe button. Love to have your support.